It seems the analysts assigned to GL stock have been enjoying the sun and sipping culottes instead of crunching numbers. Their so-called expertise has led to a cascade of blunders, and the sheer incompetence displayed is nothing short of laughable. How else can one explain their glaring misjudgments and absurd predictions? While they should have been diligently analyzing data and formulating insightful recommendations, they instead chose to bask in ignorance, leaving investors in the lurch. In today's episode, we'll scrutinize 4 analysts who have failed spectacularly, revealing their errors in our incompetence court. As we delve into their misguided forecasts, the full extent of their folly will come to light. But our investigation doesn't end there. We'll also dissect GL stock's real potential, exposing the truths these analysts missed and arming you with the tools to sidestep such blunders in the future. Prepare to be both outraged and enlightened as we peel back the layers of incompetence and deliver a masterclass in discerning genuine investment opportunities from the noise. And if you're frustrated with relying on so-called experts for financial guidance, consider taking matters into your own hands. Starting a YouTube channel could be an excellent way to supplement your investing efforts. With Tube Magic by Matt Parr, you'll discover how to leverage AI tools to create, grow, and monetize your YouTube channel efficiently. Whether you're a beginner or looking to refine your existing channel, Matt's course offers clear, actionable steps to transform your channel into a profitable venture. If you're ready to explore a new income opportunity, click the link in the description below to get started with Tube Magic. Before we begin the incompetence court session, let this be a reminder: never blindly trust so-called experts. GL stock is just another glaring example of why you need to roll up your sleeves and do your own homework. These analysts, with all their fancy titles and access to insider information, still manage to botch their calls in ways that are almost impressive if you're into watching train wrecks. Now let's get into the good stuff and break down exactly how these analysts got it so wrong, one by one. Order in the court. Our first defendant today is John Barnidge from Piper Sandler. Let's rewind to June 2020, when John began covering the stock and decided to grace us with his neutral rating on GL stock, slapping an $87 price target on it. Now, neutral in analyst speak usually means, I don't know what's going to happen, so I'll just play it safe. But then, in January 2022, John apparently had a revelation. The stock was sitting at $97, and suddenly, he goes all bullish on us, bumping his rating to overweight with a price target of $117. Quite the bold move, John. As GL's stock climbed, John climbed right alongside it, raising his price targets like a cheerleader who finally got the star quarterback to notice her. Right before GL's peak of $132, he thought, hey, why not go for $143? Because, you know, nothing says expert analysis like mindlessly chasing after the stock's performance. And then the inevitable happened. GL's stock started tanking. Did John reassess? Did he consider that maybe his analysis was, I don't know, a bit too optimistic? Nope. He just kept that overweight rating going, gradually lowering his estimates as the stock plummeted. By the time GL hit rock bottom at $38.95, John finally lowered his target to $110, but still kept his overweight rating. And to add insult to injury, he maintained this bogus outlook to this day. Because why not? At this point, it seems like John had secured his position as GL's silent promoter at Piper Sandler. GL's management must love him for that unwavering optimism, but for investors, not so much. So, we find Mr. Barnidge guilty of incompetence and sentenced to a life of mundane number crunching at your nearest investment bank. Where do they find these people? Our next defendant today was actually John's co-defendant Jimmy Bhullar of JP Morgan, but is now after intense interrogations, with investigators taking the seat as the main culprit. As you can see on the chart, they both display a similar level of incompetence, but John at least lowered his estimates. Jimmy began overweight neutral in January of 2020 with an 88 estimate, while the stock was sitting at 69. That is a pretty bold estimate for any level of neutral, don't you think? In 2021, Jimmy then began his overweight chasing of the stock all the way up to right before the peak, where he bid 133. Bold move, Jimmy. Unfortunately, you forgot to clock back into work and reassess your bid. As we can see on the chart, Jimmy, after the trench of the crash and in the middle of the current climb, which is still in crash territory to this day, has not entered any new estimates. Jimmy, you are either really stubborn, really seeing something the rest of the world doesn't see, or really drunk. I'll let you guys at home decide what happened with Jimmy. Enter your take in the comments. Our next defendant today, Wilma Burdis of Raymond James, destroyed the incompetence meter and was immediately sentenced to a life of manual number crunching. Wilma joined in on this overbidding party with a strong buy at 138 in September 2022, when the stock was sitting around 113 and about to peak and crash. Right before the peak in October of 2023, she entered another strong buy at 159, when the stock was in the low 120. Unfortunately, Wilma had the audacity in May 2024 to renter the same bid. Really, Wilma? Let's get this straight. Stock tanked from where it was, at your initial 25% overestimated bid of 160 down to 1/3 of what it was trading at, and you decide to restate your position. Bold, but unfortunately, you are grossly incompetent. At least go silent like Jimmy did. Wow, shame is a good thing sometimes, guys. Admit when you were wrong. Our final defendant today in incompetence court is Elyse Greenspan of Wells Fargo. As you can see on the chart, she was another late bloomer in this party, but her incompetence didn't fall short. She started at neutral with a 120 bid in May of 2023, only to maintain the stance and raise the bid to 146 in April of 2024, slightly after the peak. Then in April of 2024, right before the free fall into the trench, she lowered slightly to 132 and had never to this day removed the overweight call, simply adding and subtracting a few digits to the estimates. Guilty as charged. Absolutely egregious. To be fair, the final verdict on GL stock isn't in yet, as the future is still unfolding. Some of these analysts covered the stock for only a year, and predicting stock performance is notoriously tricky. We'll have to wait and see how the story develops. If you want to buy this stock, do your homework. Do not rely on these people. That is all we will say on that. Now, let's dive into the world of GL stock and see what's been brewing in the company's pot. GL, better known as Glencore, is a major player in the global commodity, trading, and mining industry. The company is involved in the extraction, production, and trading of a wide range of commodities, including metals, minerals, energy products, and agricultural goods. Glencore historically had established itself as a significant force in the market, leveraging its extensive portfolio and global network to maintain a leading position in the industry. When we zoom in on Glencore's financials, the stock's recent performance reveals a story of volatility. Up until March 2024, Glencore stock was moving upward. However, the narrative took a dramatic turn as the stock experienced a notable decline from March 2024 to the present. The stock, which had once peaked at around $132, has since plummeted to a low of $38.95. This steep drop reflects a series of market challenges, including fluctuating commodity prices, economic uncertainties, and operational difficulties that have unsettled investors. And the writing was on the walls in the previous years, as many different things occurred that reflected a negative fundamental position for the company. Lower commodity prices, particularly for coal, have hurt GL's profits. The slowdown in the electric vehicle sector and global manufacturing weakness have also contributed to its earnings slump. In a bid to fund its 77% stake in Teck Resources' metallurgical coal business, Glencore slashed its dividend by 70%, reducing it to just 13 cents per share in 2023. Adding to the woes, the company paid $1 billion in penalties in 2022 after pleading guilty to bribery and market manipulation. Environmental concerns, including pollution and CO2 emissions from coal, as well as human rights abuses, have further tarnished its reputation. Glencore also faced uncertainty with its coal division, initially abandoning plans to offload it after shareholder pushback, but later reversing course due to shifting sentiments on fossil fuels. So this was going on in the years preceding the crash, and these analysts were touting the company as a buy, or even strong buy in some cases. Complete negligence and incompetence on all of the analysts convicted today in our incompetence court. While Glencore has a track record of impressive achievements, the recent downturn and ongoing strategic challenges underscore the need for investors to stay vigilant and carefully assess the evolving factors influencing the company's stock. In today's episode, we've peeled back the layers of analyst blunders and seen how they can lead investors astray. The key takeaway from our analysis is that analysts' predictions can be wildly off the mark, often due to a lack of thorough research or an over-reliance on optimistic assumptions. This becomes glaringly evident when we look at the recent issues with Glencore. The drastic dividend cut is a red flag that signals potential trouble ahead. In the world of dividend stocks, a slashed dividend isn't just about your returns taking a hit. It's often a sign of deeper financial instability within the company. Keeping a close eye on dividends is crucial, as they provide insights into a company's health and financial stability. So remember to watch your dividends, not just watch your money growing, but watch if the company is healthy enough to continue paying them. Also, company scandals like Glencore's bribery and market manipulation penalties are another strong indicator of a bad investment. Scandals not only tarnish a company's reputation, but also suggest a lack of ethical oversight from the top. As Warren Buffett often emphasizes, you should invest in companies led by managers you can trust. When evaluating potential investments, prioritize companies with a track record of ethical behavior and strong leadership. I don't care what people say about this company. After a scandal like that, I wouldn't touch it with a 10-foot pole. I listen to Uncle Buffett's advice very strictly. So remember this: to avoid falling victim to similar mistakes, always conduct your own thorough research. Don't rely solely on analysts' predictions. Dig into financial statements, company strategies, and recent developments. Emphasize critical thinking and due diligence in your investment analysis. By doing so, you'll be better equipped to make informed decisions and steer clear of investments plagued by poor management and questionable ethics, and you ensure that you behave competently. For if you don't, you just may wake up one day, turn on YouTube, and see your face in the incompetence court. Don't do that to yourself. Check out this video for another stock that analysts botched history with, Intel Corporation. In this video, we also delve into the conflict of interest issue and how analysts often have the unspoken position of company promoter for the companies they are supposed to be scrutinizing. Disclaimer: incompetent capital is for entertainment purposes only. While we critique the missteps and mishaps of financial analysts, we acknowledge that they likely tried their hardest and simply made a bad judgment or two, or maybe 300. Our aim is to highlight the funnier side of investing and analysis, not to make personal attacks. Please note that we may sometimes add fictional elements to the storyline for entertainment purposes. And finally, remember that even the best professionals can miss the mark. So laugh away, but please avoid making personal judgments about the analysts we report on.